Hello traders, the title of the video is how to count waves more profitably like a pro. Alright, so there was a comment yesterday on one of our videos when a trader was complaining that, okay, we do not know a shit. In fact, use the word fuck you, alright, the F word, alright, and say that we are talking about the same thing all the time. All right, this is true because this channel is about Elliott wave, and there is no much to talk about, only about the Elliott wave, the prime move in 5 wave, what that we call the multi-wave, and then we come down 1, 2, 3 for a correction, and then we have an Elliott wave cycle. It's the same thing that the prime is doing all the time. All right, so if you are looking for a different type of Elliott wave, well, you have to create it yourself, or if you are looking for some exciting subject, well, you may subscribe to other channel. All right, so but because the trader did insult me directly, I did bar the trader to make any more comment on this channel, which I hate to do because the comment should be relating to the topic that we are discussing. You may say that this is a useless video. I will not bar traders for saying that this is a useless video, but if it become a personal, then I may think that probably this trader should not be a subscriber to this channel. So this video talking about how to count wave more profitably like a pro. I want to share something with that trader. All right, so you want to count Elliott wave. All right, what do you need to do? Or you want to use Elliott wave principle profitably, what do you need to do? You just need to practice over and over. So I've been watching a lot of video on YouTube, and one time one of my favorite program is the Shark Tank or the Dragon Den, and one of the investors there was saying that without a focus there is no success. And I got it, all right? It is true, all right? That's why we created this channel. It's Elliott wave. And some traders hate me when I talk about another topic. I noticed that recently when I was talking about volume bar and Elliott wave, some traders mark the video down. I understand why. Because some of the traders want this channel to be only Elliott wave and only Elliott wave. They don't want to know anything else. I can understand that. Let me speak to those traders also, because we are in the financial market. There are different players, and those players are using different tools. By you using Elliott wave, you are competing with those traders. But if you are competing with somebody, you want to know what these people are able to do. Okay, so you want to go to war with another country. You want to know what kind of arsenal they possess, yes or no? So we need to know how other traders are trading, whether they are useless traders, crazy traders, or boring traders. But if we are coming to 2-4 Elliott wave, and you are looking for a different topic other than the Elliott wave, you will be disappointed because it's going to be wave count, wave count, wave count, wave analysis, wave analysis, wave analysis. So instead of labeling this video Elliott wave count for only automotive incorporation, which will be true, so traders that will be looking for, traders that are trading only stock will be very happy that I'm analyzing only using Elliott wave principle, all right? But that's not my objective. My objective is to talk about wave count. So how do we become a better Elliott wave count traders? How do we count wave more profitably? Only by practice. So you'll be practicing. So you'll be looking at different charts every day. This is about focus. Working on your wave count all the time. It's boring, but it's the same thing you'll be doing over and over and over and over until you become an expert in it. See it from different view, see it from the different angle, how other traders may use it, and that's how you do it. So this is why I'll use different charts talking about wave count, wave count, wave count. The objective of this YouTube channel is about wave count. So sorry to disappoint traders that are looking for something else. It's going to be like this every day, looking at different charts, trying to show traders how to count wave, and this is what we're about to do again. So going back to the title again of this video, how to count wave more profitable like a pro. One will practice. All right, you practice on one thing. Don't look for 100 things. One, become expert in one area, own it, and work with it. That's it. Very simple. All right. Nothing new. It's going to be the same thing. All right. The wave forecast, the same. All right. First wave, we'll be talking about the same thing. Wave validation. How do you recognize the first wave? It's going to be the same thing and the same thing. I can understand, okay, some trader may be trading other stock, all right, that stock that are not American stock, because I'm using TC2000. I'll be talking about it in another video, and you understand. If one day you open also YouTube channel, I'll be recording another video very soon. Thing you need to understand that are happening behind the scene, all right? So personally, I don't insult any YouTube trader, because I think, in fact, you see, it's antisocial to insult, okay, okay, a YouTube creator. It's not a good community feeling to use the F word and say F you. That's not good. All right? That's not even professional. It doesn't make any sense at all. It doesn't belong to YouTube at all. It's not the spirit of YouTube. All right, let's talk about it. It's not nice. All right. So practice will make you better. So now we're going to look at hourly stock. It's going to be the same thing. Here we are. So we see. So trader, the point I'm making before is that some trader, maybe you are in another country, you are not trading American stock, and you say that, John, you are not talking about indices, you are not talking about S&P 500, you are not talking about okay, the stock in my country. But how do I get the stock of your country if I don't pay for that data? How do I have the data to look at every stock in the whole world? Well, I'm using TC2000. I have data for American stock. I will be talking for American stock. If you think that this channel is not for you, then you're going to look for other channel where other YouTube creators are analyzing stock that belong to your country or somewhere else. But it doesn't matter really, because if you can learn to count wave using American stock, you can count wave even if you are trading currency or something else. Doesn't matter, all right? So focus on polishing your wave count, and if you've done it already, then you are free to go. That's it. All right. A bit of blah 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 from my side. Okay, here it is. So I have counted wave using already here. This is my first wave. As always, we break resistance on the left hand side. Wave count guidelines, followed by the second wave. And the third wave is the longest wave, has been extended, and the fourth wave, I leave it there like that. Now we have a fifth wave right there for Oli, and this is a correction that is underway here. It's not finished. If you look carefully, my friend, all right, at the fifth wave, what I'm calling the fifth wave on the monthly chart, okay, this is about polishing your wave count so you are able to count wave on any time frame, whether you are trading stock, future, commodity, or any stock that belongs to any stock market. But if you look on the monthly chart here, the structure of supposed to be the fifth wave, it looks like it's subdivided into three. Yes or no? Can you see that? How do you know that this is a fifth wave? But now the structure is saying 1, 2, 3, but the impulse wave are not subdivided into 3. They are subdivided into 5. Now what do you need to do? This is what we are talking about. Polishing your wave count. You will go to a lower time frame, a weekly chart. So what I'm going to do, I'll place a vertical line there, and I'll place another vertical line right here on the side of it. All right, then we go to the weekly chart to investigate whether is something hidden here that we cannot see on a monthly chart, though it looks like 3 wave, which will invalidate this as a fifth wave. All right, and we go to the weekly chart. Here it is. Now I'm going to remove the line that I draw on the monthly chart. We want to investigate what is happening there. Okay, here it is. If you look carefully, in fact, it's from here. You see, so in fact, our fourth wave ends here. Now on the weekly chart, things are becoming a little bit clearer, yes or no? You see? So this is why we are trying to communicate to traders. It's a little bit of a problem here. You will see soon. 1, 2. You can see that the tail, this is what trader was asking. See, the tail came almost to the beginning of this move up. Okay. Now, what I say to trader, it's up to you. You can put a question mark on it. Now there's a problem, all right? Because the fourth wave or the fourth manual wave is overlapping the first wave. You see here, and then this move up. So I'm trying to see what has happened here. You can see 1, 2, 3, 4, 5. This is not an impulse wave because the fourth wave is overlapping. Okay, all right, it's overlapping the first wave. We have an Elliott wave violation right there. Okay, an Elliott wave violation right there. Okay, now sometimes you may see that, okay, but you again carefully, okay, carefully, because things became a bit messy here. So we are talking about the reason why I record this video. That's it. You see here. So you see this is the top of this move up. This one also got a tail, almost come to the beginning, and this one is going below it here. And what's going on? All right. I'm going to go back again to my monthly chart to see what is happening here. It doesn't look like an impulse wave. All right. Going back again to the monthly chart, you see. So here we are, okay? So we go back again to see our wave count. So this is it, boom, 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 boom. It went up nicely. This is the third wave. We can't deny it because it's the easiest wave to recognize, followed by pullback here. And why do we have all this messy situation here? Okay, moving average 14. Price came down here and then formed this doji. And then the price formed here. Okay, now wow, let's go back to the weekly chart one more time. Here it is. Do we have a double bottom chart pattern? 1, 2, 3, 1, 2, 3. Now you see that it's becoming a bit complex now, my friend. So 1, 2, 1, 2, 3, 4, 5. Can be the third wave, fourth wave, fifth wave, no. 1, 2, 3. Hold on, please. I came out of this channel. Retest it here. And then went on. Oh, this is quite messy here. Hold on, please, traders. Okay, traders, as you can see, it's a bit messy right here. This is what we are talking about, practicing to polish our wave count. This structure is not very clear. We need to investigate more what is happening here, all right? So definitely this is the fourth Elliott wave. Looking at the price structure, it looks to me that we have a truncation right here. And I will explain myself in a minute, so allow me to draw on my chart. I will discount the tail of this candlestick bar. This is my own judgment. That's what I'm talking about all the time, because when they have a tail like this coming almost to the beginning of the first wave, we put a question mark on it and use our own judgment, okay? And then the price went up to this point. And then we have that tiny bearish candlestick bar there, a shallow retracement on this weekly chart, followed by another move up there. Feel free to bang the table and disagree with, okay, one more time, okay. Now again here you can see that this one also got there was a bit of volatility here. I don't understand why they have this volatility. The market was volatile here, creating a bit of distortion here. I will discount those. Okay, I will discount those because you will see soon when we continue to record a video. I'll encourage traders to stay with me even if you are upset or disagree with me. So first minor wave or the fifth wave, second minor wave or the fifth wave, third minor wave or the fifth wave, fourth minor wave or the fifth wave, and the fifth minor wave of the fifth wave. We have a truncation because the fifth wave failed to go above the high of the third area wave. This is what we call the truncation. All right. You may check our website www.24Elliott Wave YouTube channel to know more about the truncation. All right. So this is a truncation with a bit of volatility that have created a distortion in the market. You see the tail here and also this shadow here. Now, why am I accepting or considering this as the fifth wave? Now, that is the verification that we do. This is what we are talking about. The same thing that we are talking about all the time. So we call it a fifth wave. All right, we apply Fibonacci. I'll apply Fibonacci extension. Okay, hold on, please, traders. I will apply Fibonacci extension because a correction brought the price above the high of the fifth wave. We will be thinking of a flat correction. Therefore, we will apply, a Fibonacci extension. Oops, I'm moving line, which I do not want to. I'll put it back in a minute. All right. So because a correction went above the high of the fifth wave, to verify whether we have a valid fifth wave, we will apply Fibonacci extension. Again, I'll discount the tail. This is what I'm talking about. If you can do both. You can put it to the tail, see where is the 138.2%, and then put it at the closing price, see where is that 138.2% level. By placing it at the closing price, it makes more sense between the closing price of this candlestick bar here and also here. So, it makes more sense to put it at the closing price. And here we have the 138.2% Fibonacci extension level of that doji, all right, that messy fifth wave. All right, so this is the fifth wave right here and not up there. So a correction has begun. Okay, this is the correction first, but I went down one more time here. It's a flat correction, not very neat and clean, followed by the B part of the flat correction, bringing the price to 138.2% Fibonacci extension level of that messy fifth wave. Feel free to disagree with my wave count, and I will say this is my wave count. All right. All right. And then we see the price coming down. 1, 2. There should be This is 3, and there should be one more move up before another move down in normal condition. Okay, so this is a flat correction that is underway here on the monthly chart. At this point in time, that's all we can say. So referring back again to why that trader was saying that we were talking about the same thing all the time. This one example again here. Now we are counting wave, doing exactly the same thing, and now we face a situation that is a little bit complex. Right, things are not very clear and neat, and by practicing dealing with those complex wave count, we come on top of it, we learn from it, and we improve our wave count. Trading skill. That's the whole point of this channel. Counting wave 100 times, looking at different chart, try to figure out is it making sense, and so on and so on. That's all right? So it's not very neat and clean here, but I'm happy to work with this. Now that apply Fibonacci extension to this supposed to be fifth wave. This is what we see. So at this point in time, I'm happy with that. and I'm moving on. I can work with that. Otherwise, I'm stuck. All right. This is what we are talking about. We are stuck. So if you go back again to the monthly chart, all right, our fifth area wave is ending right here. Okay. So first wave, second wave, third wave, fourth wave, messy, a fifth wave. We are now in a corrective phase. No, not there. The fifth wave ending right. Hold on. Where is it on? Right here. Okay. I'll put it to the side of it. Okay. It's ending right there. Okay. That's our fifth wave right there. It's a truncation when the fifth wave failed to go above it. Alright, so because I cannot discount this as a third area wave, it's obvious that this is the third area wave. There's nothing I can replace it with. So I have to move on. And this is the fourth wave. Where is the fifth wave? Well, now, if we say it's ending here, the structure is not aligning. It's three waves. It can be the fifth wave. Now that we look a little bit deeper, it looks to me there is a bit of distortion, a bit of volatility in this session. You can see the doji here. Therefore, this is our fifth wave. Well, we can put a big question mark on it, which means what kind of a fifth wave is this one? Okay, let's move on. We leave it there as a preliminary wave count and we move on. Okay, now we say, okay, first part of the flat correction, second part of the flat correction. This is the C part of the flat correction that is underway. But we do not stop there. So, you see, the exercise that we are doing here is that we're looking at a chart and we are trying to count wave, all right? So each time that we are looking at a specific chart, there's a different scenario. All right, as you can see now, it's a different scenario. Now, from the monthly chart, we'll go to the yearly chart and see, apply what we call the higher degree wave count. Is everything aligning? So what we have done on the monthly chart, we have counted 5 waves, which is a multi-wave. A multi-wave is always considered as one wave of a higher degree. So whenever you count 1, 2, 3, 4, 5 wave on any time frame, that 1, 2, 3, 4, 5 wave is one wave on a higher degree. So trader may say, Joe, you talked about it before, you are talking about it again. This is area wave. There's nothing else. All right, this is area wave, and this is what's going on. We're not going to invent now the wheel one more time. All right, that's it. So, all right. So this is it. So, all right, but different chart. Okay, different scenario, a different topic. Okay. All right. So looking at the yearly chart, if you look carefully, if I move my chart like this, it becomes clearer. We talk about using moving averages. You can see this is a trending phase on the yearly chart, followed by a tiny correction retesting a moving average 14. Very useful moving average. So first wave of a higher degree, second wave of a higher degree. The wave count that we have performed on the monthly chart is the third wave of a higher degree. For this stock only, automotive incorporation. So we are now in the third. So the wave count that we have done on the monthly chart is relating to the third wave of a higher degree. But the bigger picture is this: first wave of a higher degree, which was a trending fall, followed by a correction that has retested the moving average 14. Now we see a deviation from the moving average 14, forming the third area wave of a higher degree. All right. So where are we? Hold on, please. I want to remove a line on my chart. That's the one. I want to remove that. Somewhere there. So that's our third area wave of a higher degree that is subdivided into 5 waves. Now we are in a corrective phase. All right. So how do we handle the corrective phase? Another thing that we can do. All right. This is what we are doing. Practice, 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 practice until you become an expert. That's it. Same thing. Oh, it's not easy to see the retracement. 38.2 is a 50% Fibonacci retracement. So using the retracement, okay, I need to adjust my line correctly. So, oops. All right. Using the retracement of the second wave of a higher degree, we can forecast, we can predict that using the second wave retracement, we can forecast that the retracement, that is the correction that is underway, can bring the price to the zone of 50% Fibonacci retracement of the higher degree trend. Did you get that? Because we can use the second wave to forecast the corrective phase. All right? So therefore, because the retracement for the second wave of a higher degree was a 50% retracement of the first wave of a higher degree, in our mind, we can be prepared, we can expect that the correction can bring the price to the 50% Fibonacci retracement of the trend, okay, the trend of a higher degree, this multi-wave, first wave, second wave, third wave, all right? All right. So you did not mention that. What is the time in London now? It's 1:25 in the morning, so getting a bit tired now. So we are not talking about correction. The correction that we are talking about here, we are talking about the fourth wave of a higher degree. Correction traders, the correction is not yet underway. So we see first wave, second wave, third wave. We are now in a fourth wave, all right? So that is a big correction that I need to mention now. So on a monthly chart, that a flat correction is forming, okay, the fourth wave of a higher degree. So, all right? It's not the real correction yet. Okay, as I mentioned, it's making a correction now. Go back again to the yearly chart. Are you with me? Are you with me? Don't get lost, my friend. Stay focused. Remember, we count first wave, second wave, third wave. Now we are waiting for the fourth wave. And because the third wave has been extended, we will expect the fourth wave to be shallow, all right? So we will apply instead, not to the first wave, not to the second wave, but to the third wave, we apply Fibonacci retracement. I'll go to the monthly chart to do that. To the third wave of the higher degree. The third wave of the higher degree is this one here. 1, 2, 3, 4, 5. Stopping right there. Okay, between the two vertical lines, that's our third Elliott wave of a higher degree. Therefore, we will apply a Fibonacci one second, please. That's our third Elliott wave. We apply Fibonacci retracement to that third wave. Attention please, traders. Has ended right there. And we will expect the fourth wave to be shallow, which means we don't want it to go below. So this is an expectation, not guarantee, all right? Expect it to come down to the 38.2% Fibonacci retracement of the third wave of a higher degree. All right, that's our expectation in that zone, 38.2%. It may have a bit of tail. There's nothing wrong with it as long as it stays as a tail and quickly close back above that level will be reasonable because we are dealing with an extended, okay. So possibility, not guarantee. All right, there's nothing guarantee. Possibility, expectation that probably it will bring it to 38.2% Fibonacci retracement level of the third wave before we may see the real fifth wave of a higher degree. So now we can see first wave, second wave, third wave, fourth wave, fifth wave. That is the forming, okay, the third Elliott wave of a higher degree. So anytime we count 1, 2, 3, 4, 5 equal 1. 1, 2, 3, 4, 5 equal 1 impulse wave. And that impulse wave is the third wave of a higher degree in this case. So the first wave of a higher degree is the orange one here, followed by the second wave of a higher degree that pulled back to 50% Fibonacci retracement level of the first wave of a higher degree. Now this is the third wave of the higher degree. We are now in the fourth wave of a higher degree. So the flat correction that we are talking about now is the fourth wave of a higher degree. Slowly but gradually, we'll prefer it to come near the 38.2%. That level, in fact, is in the zone of $181.29, $181.29, that zone. And then from there, we will expect the fifth wave of a higher degree up there. And again, when the fifth wave of a higher degree is completed, we'll expect a correction. And the minimum expectation for that correction, here it is, which I was doing before, is that because we can use the second wave to forecast, the corrective phase. In this case, if I stop only using the retracement of the second wave, the first thing that will come into my mind, okay, is that when that fifth wave is completed, we'll expect the correction to come down to the 50% Fibonacci retracement level of this bigger trending phase all the way up here. This is about the retracement of the second wave, helping us to forecast the possible reversal point of the normal corrective wave. But this is just the theory. The reality of the market can be different, but this is just an expectation. The price may print something completely different, but if it's doing exactly what we're expecting, okay, we'll take advantage of it. But there are more to this if you want to forecast the corrective wave, and I have already recorded videos talking about that at 24 Elliott Waves YouTube channel. All right, so this is the end of this tutorial. Again, talking about the same thing, meaning Elliott wave principle, Elliott wave analysis, Elliott wave theory, corrective wave, third wave, first wave, fifth wave, and so on is the topic of this channel. It's not going to change. And today we were talking about how to count wave more profitable like a pro. It means that practice, stay focused on that wave count, polish your wave count, look at different time frame. As you can see on the weekly chart, we faced a situation when we were trying to label the fifth wave was not easy. How do we manage it? This is it. So traders, watch the video. Hopefully they find it useful and they learn something from it. They go around and they practice until they start improving their wave count. One cannot call oneself Elliott wave practitioner if one cannot count Elliott wave correctly. All right, this is what we are trying to do. So things that you need to know if you are counting your wave, so you may improve it. So tomorrow or day after tomorrow, I will come back again, looking at another chart, counting another wave, because it's all we do as an Elliott wave practitioner. There is no Elliott wave practitioner out there that is not counting wave. They are doing exactly the same thing every day, day in, day out. In fact, I had traders that told me that I have some TST trader that told me that all they do care about is Elliott wave. All right, they don't want to know anything else. They just want to know about Elliott wave, and they are trading. They are counting waves, and they want to count waves. And that's why we have this channel for traders who want to count wave and only count wave. A boring game, but very exciting sometimes when we see a complex wave count. All right. All right, so enough of my blah 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 today. All right, so if you have been upset with my blah blah blah, forgive me. Sometimes you want to let it go so you can be free from it and move on. All right. If you have any question or suggestion, put in the comment section. In due course, I will be recording another video to answer your specific question. If you find this video useful, all right, feel free to give us a thumbs up. If you think that this is another blah blah blah, okay, let us know by giving us the thumbs down. If If you think that this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. Reality STW24 traders talking about how to count waves more profitably like a pro. Happy trading to you all and speak to you soon.